Yeah, it's a great question, and I'll just speak to my personal view. I think Destiny's launch and the premium on the Destiny fund shows the potential of an idea like this and shows how much further we can go with this idea of giving real access to people to these exciting companies. I suspect that anyone new trying to come to market will be faced with the decision of, do I try and do a closed-end fund like Destiny? Do I go with the interval fund? Might be a bit of a smoother route, but doesn't really work as a structure. And I think it will really refresh that conversation on different structures to approach the markets. But I think what Destiny's done really is show that it's trying to pioneer to give access to these people that really want the access. And I think the excitement around that and the innovation around that will be hard for a new brand to replicate in the same way. If a new brand comes in with a maybe less exciting portfolio or a similar structure, but may not hit in the same way that Destiny did in its launch. So I'm sure there will be attempts, but I think the debate of closed-end versus interval fund will continue to thrive, and there's different viewpoints on that. And as with most things in investing, it comes down to personal needs and personal style. And for some investors, liquidity is really a non-negotiable in terms of whether they go with closed-end fund or interval fund.
Yeah, that makes a lot of sense. And I think there's, like you say, a big first mover advantage, especially with the branding. And they've done a really great job with the marketing, at least from what I've seen. So I was curious, I know you worked previously at FRGE, I believe the CEO of Destiny, so held previously at FRGE as well. And for anyone who's not familiar, FRGE is really one of the preeminent marketplaces for private shares. My understanding is they've really tried to build out a stock exchange essentially for private share investing. I was just curious, were there any lessons that you guys took from FRGE that were then applied to how you thought about or structured the Destiny approach?
Yeah, it's a great question. I think that FRGE did a lot of things really well and has built a pretty substantial business to a notable scale. One of the things that Destiny tried to do in a new way was how to reach people at scale. So one of the ways you can reach people at a brand new scale is to be available as a public ticker listed on the New York Stock Exchange that you can buy in your regular brokerage account. So plugging into those kind of existing networks by being available on a brokerage app is unlocking a completely new scale than a private brokerage, for example. The other thing is that FRGE, unfortunately, is subject to the restrictions I mentioned on the regulatory side, where they can only work with accredited investors, the high net worth or high income investors. And so Destiny being able to be offered to everybody, accredited or not, is also a huge step forward in terms of advancing access. And that's really critical to the mission of Destiny. It shouldn't just be the wealthy that get to invest in the pioneer companies of our age. It should be everybody that gets a stake in the future.
And I think that is one of the things that is really innovative about Destiny, right? Is this idea that it opens up access to non-accredited investors through a public exchange as well. One thing that I'm curious for your thoughts on is we've seen such an expansion of basically the accredited class over the past few years, especially inflation. Yes, it increases the cost of living, also tends to drive up asset prices. That's made a lot of people fit into this accredited bucket. I believe the statistic is like 1 in 5 US households are now accredited. And I'm just curious from your perspective, because you're talking to buyers, I'm sure, every day, is accreditation restrictions, is that a really big hurdle still for people who are interested in this market? Or do you think it's more in the infrastructure side of things or more in the access or knowledge? Frankly, I just think people are not aware that you actually can invest in a lot of these companies if you have the right pathways to do so. Yeah, I think the general question there is, to what extent are accreditation restrictions still the main hurdle in this market versus more operational concerns?
I think it's a huge mix. You'd be surprised how many people are potentially high net worth, but might not be accredited, because the definition of accredited might be, I think it's $1 million net worth outside of your primary residence. In some cases, people have a lot of money in their primary residence, just as an example, but there's cases where someone might be a qualified purchaser, which is a much higher level of wealth, but by some quirk might not necessarily qualify as accredited. Or they might be a PhD in rocket science, but they might not be allowed to invest in SpaceX because maybe they're not technically an accredited investor. So there's all different quirks on the regulatory side, of course, that keep a lot of people out that might actually be really sensible, passionate, aware investors. The other thing is, of course, the operations of it. So it's still very difficult to have many small investors compared to one larger investor. And there's also the operational hurdles and just really the incentives for managers being different to deal with so many people at smaller sizes versus one reliable large seller or large buyer. So that's a dynamic too. There's also the regulations around funds, around SPVs, and how many end buyers can be pooled in an SPV. So in some vehicles, you might have a limit of, say, 99 investors. So if you can only have 99 investors, as a manager of that SPV, you want to make sure the total amount you can raise through those 99 investors is as high as possible. So you have to be a little bit selective in terms of the minimum size that you allow people to invest to take up one of those precious seats. It's definitely a little bit complicated. I think there's, again, more and more smart people working on the problem of access and working on how to make it more efficient operationally, how to maybe expand regulations to be more inclusive, but there's still a ways to go in terms of how it actually plays out.
And that's a great point, the idea that there are these non-accreditation regulatory restrictions, right, like the 99 investor SPV hurdle. One of the ways that people have tried to sidestep some of these restrictions or basically sidestep a lack of supply is to use these forward contracts, right? Which I know can be a little bit controversial in the private market space. It is an innovative approach, right? Where you have, instead of trading the shares today, you have an agreement that says on paper, I will get shares whenever this occurs at some specified time in the future. So I was just curious if you have a perspective on, do you think that's something that's going to grow in the future, less in the future, and just maybe comparing and contrasting versus just direct private share investing?
Yeah, I definitely think forwards are a more exotic structure compared to maybe investing in an SPV that directly holds shares or investing via a direct transfer where you end up on the cap table of the company. So all things remaining equal, if you had a choice, you would always prefer to be on the cap table of the company, to have the company directly approving you onto the cap table, and in some cases having a stock certificate issued in your name. That is like the golden result. But a lot of these allocations in these top companies are getting more and more competitive. A lot of these companies are getting more and more restrictive in who they allow to trade. And some companies, preferred shareholders can trade freely. But if you're a common shareholder and you've worked at that company a long time, just by virtue of being a common shareholder, you might not be allowed to trade freely. So with all of these complications and the tension of liquidity, which can be so real for a lot of people, there are innovative structures coming about, whether it's multi-layer SPVs, whether it's forwards, whether it's stock option financing, where people need a little help to even exercise their shares, and other structures. So I think the innovation and the less vanilla structures are really a product of this pervasive tension and liquidity need that people do have in these late stage companies.
Yeah, I think that's a great answer, and I think sums up the tension there. One thing I really wanted to touch on was you have such a depth of experience in this space. You're at Forge, you're at Destiny, and you eventually decided to strike out on your own and do Healey Pre-IPO, which is, as we mentioned, again, a boutique broker firm. I'd be really curious what kind of drove that decision to want to start your own thing, maybe what some of the gaps in the market you were spotting were, and if you could just speak to us a little bit about who you're working with today.
Absolutely. So I decided that I wanted to build a great small business that focuses on providing a great service and not to optimize for automation, for scale, for taking over the market. So my intention is not to raise VC funding. My intention is not to have hundreds of employees. I just want to work on quality clients, quality deal flow, and execute to a really high standard. So I think that's really my brand and what separates me in the market. When you have all these huge platforms trying to become $10 billion companies and really optimizing for scale. So I think there's companies out there that are doing a great job at what they do, but what they're trying to do is just a little bit different than what I'm trying to do, which is to provide more of a concierge style, personal approach to helping people navigate pre-IPO market.
And do you work with both buyers and sellers?
I work with both buyers and sellers. I work with both individuals and institutions. So a little bit of everything. I also have clients and partners across the world, having worked in Hong Kong for a couple years, having lived in multiple different geographies. So I think my network is very broad, and that allows me to look in different places than others might to serve my clients. So I think when you're trying to hunt a certain stock, especially when it's hard to find, or it's hard to find good terms. Maybe it's a name that is super competitive and right now you're only seeing it with carry. The wider you can search to find a deal that beats that offer you're seeing, maybe it's a 0-0 deal when the rest of the market has carry on it. Really, the wider you can search, the better. And so I'm very proud of how wide and broad my network is. And that allows me to hunt really broadly for my clients for that elusive buyer or seller they're seeking that matches what they want.
Yeah, and I think it speaks to what we were discussing earlier about this kind of divergence in liquidity sometimes between some of the top names and some of the rest of the market. So I'd be curious, that's two visions of where private share investing might be headed, right? On the one hand, you have things that are more on the Destiny end, which is publicly listed, you invest in kind of a fund, it's like a diversified structure. On the other hand, I believe you offer a very white glove service. It's very boutique, it's one-on-one, personalized, actually going out and directly sourcing the shares that you're interested in investing in. Again, these things can, of course, coexist. My mind goes to, yes, there are people that invest in index funds. There are also people that invest directly in stocks and shares. But I'd be curious on your thoughts on maybe what the future of the market actually looks like. Do you think it's going to be more on the personalized end of things? Do you think that can coexist well with the more diversified indexy side of things?
I think it will coexist. I think the market is more fragmented right now than I've ever seen it. And I actually believe it will get even more fragmented, and that will just be a feature and reality of the pre-IPO market for years to come. And so what I mean by that is there's many different players in the market, many different brokers, many different wealth managers, investment banks, et cetera, all with their own proprietary relationships and with clients that are specifically loyal to them. And so it's going to be more and more confusing, I think, to navigate this market, especially if you're that public market investor that's trying out pre-IPO for the first time. It's just really an impossible world to try and navigate if everything is so fragmented and there's no one centralized place where you can go to find your seller or go to find your buyer. And so I think in that fragmented world that we're finding ourselves in, having a broker that you have a good rapport with that explains things in a way that syncs well to your personal style, how you like to communicate, and having someone who can guide you through some of the structures and the quirks of this market becomes more and more valuable, really. The more messy the market is, the more value there is in a good broker.
Yeah, so you've used this phrase pre-IPO a few times, right? And it's Healey pre-IPO. I'd be curious, what is the thinking there between, there's so many ways you could describe this market, right? But pre-IPO, private share investing are some of the main ways to do it. To you, do those markets, are they different, the pre-IPO market versus maybe the rest of private share investing?
I would say pre-IPO is a subset of the private market. So private market would be any shares or any companies that are not publicly traded. But then within the private market, you have early stage, mid stage, late stage. So early stage being more like traditional venture capital. But then you have this ultra late stage of venture capital or ultra late stage of private companies, which is the pre-IPO space. So pre-IPO is typically those larger companies, many of them unicorns or larger in valuation, that are considered to be in that last stage before they might go public. So in some cases, the IPO could be a few years away, in some cases longer, but pre-IPO really signifies that they're at that stage of size and maturity where whether they IPO or not, they might be in that profile of a company that could IPO soon.
What do you think it might look like if we're having the same conversation maybe a decade from now? What do you expect to maybe have changed in that time?
That's a great question. I think there's a lot of companies in this market that are trying to build intelligent, scalable ways to bring people in. Large pre-IPO brokerages, for example, are really grappling with working at scale to bring people to the pre-IPO markets. I think those companies will continue to invest a lot of money in building these huge ecosystems, whether it's data, whether it's custody, in having these gigantic pre-IPO companies essentially operating almost like banks for the pre-IPO market. So I think those companies will continue to compete, and I'm interested to see how each of them fare, because there's a lot of those companies vying for that dominant market position, and that we'll continue to see them compete for market share effectively in pre-IPO. I think you'll also see parties try and provide more of a boutique service, more like me, where they're not trying to take over the market. They're just trying to have a really good business and serve really great clients and work on great deals. And so you'll see that too. I think because there are so many different types of clients and personalities in this market as buyers and sellers, there's going to be different types of brokers and services that fit different people. And so there are people that might rush to the perceived stability of a larger company, and that might be great for them as just a kind of default option. But I think you'll see people looking for a slightly different service, or whether it's a slightly niche service provider in the market, or those stock option financing companies, whether it's a broker that is more boutique and just fits their personal style, or is really good at hunting the companies or the structures that they specifically want. And you'll see different buyers and sellers split off to different types of players in the market based on their personal style and goals.
And I think that makes a ton of sense. In a fractured market, it's unlikely there's just going to be one universal solution, right? So I think that's a great place to end it. Again, thank you so much for joining us, Christine. I have learned a ton. I hope the listeners have learned a ton. And if people want to find out more about your work or how they can get in touch with you to work together, what's the best place to reach you?
HealyPre-IPO.com, or you could also contact me on LinkedIn to get more information.
Got it. Healey Pre-IPO, spelled Healey, pre-IPO.com. Thank you again for all the listeners for joining us. This has been the Alts.co podcast. You can find all of our work on Alts.co, including our flagship newsletter. You can also chat with Alts community members anytime on our Alts Circle community, which you'll be able to find in the description. Thank you for joining us, and thanks again, Christine.
Absolutely. Thanks so much, Brian.